So what's going on, guys? I just shot a sales training for our sales team, and I figured might as well shoot a video for you guys on YouTube. Here are the 4 sales metrics that will determine how much money you will make as a life insurance agent. If I knew this when I got started as a life insurance agent, I would have retained a ton of more business. I would have had less chargebacks. I would have made way more money, and I wouldn't have screwed up as a life insurance agent. And if you're not making the money that you should be making as a life insurance agent, here are the 4 metrics that we track that are crucial for our success as a company, and ultimately success that we track for our individual agents. And if you can control these, you can understand what you need to achieve with these 4 metrics. Guarantee you will make way more money. So you want to stick to the end. These are crucial. These would have saved my business, and they'll be super helpful for you as well. So if you want to make 6 figures, you need to track numbers, and you need to track specific numbers like these. Okay, I will teach you how to track them, how to identify them, but first you must understand the 4 key metrics, crucial key metrics to track if you want to build sustainability and actually grow your bank account as a life insurance agent. The first one is placement rate. Okay, first one is placement rate. You might ask, what is placement rate? So I wanted to explain that to you. These are the policies that you sell that actually go into effect. If I sell 10 policies right now as a life insurance agent, but 0 go into effect, how much money do I make? I make no money. Okay, this is when the clients make their first payment. This is crucial. This means that you have to develop a sales style, not just to sell policies, but to sell policies that clients actually pay for. So 2 different things. So you as a life insurance agent want to understand and track what is your placement rate. Just because you sign up with a policy does not mean you're going to get paid. So you have to make sure that you sign them up with a policy and then they make their first payment. So you make money when they make their first payment. So that's how you get paid commission. So let's go ahead and make sure that they make their first payment. You might ask, why would a client, I just sold them a life insurance policy, why would they not make their first payment? Well, there's 5 core reasons. Number 1 is they could have banking issues. They could have changed your bank account. Bank account might not be active anymore. So if you sign up a policy and it's bad banking information, placement rate is going to be low. Secondly, is that you as the agent could have made an error. You could have typed in the banking information wrong in the application and you sold the policy, and then, the company comes back and says, hey, there's no money in there. I'm going to give you a chargeback. And then you never get a hold of the client and you're screwed and you owe a chargeback. So third core way is there's no money in the account too. So if you sell a policy and there's no money in the account and they try to draft the money, the policy won't place. So you need to fix that. Make sure people actually have the money. Fourth is bad business. People don't have the money. People have bad bank account information. You're selling card business. Bad business will determine a low placement rate. And then lastly, the longer that you push out the policies will dictate your placement rate. If you just set up policies for the future, I'll go put it on like the next in 35 days or 30 days, the policy might not place, meaning that you did all that work and you never paid for it, meaning that you never got the money that you were looking for. So what you want to have is you want to have an 80% placement or above. Will determine the health. This will make sure that you're actually selling good business and making sure that you are making money as an agent. So if you have 10 policies, you want to make sure that 8 of those 10 policies minimally go into effect. Okay, the best tip that we train agents is to get a high placement is start policies immediately. Don't post date. Okay, the longer that you wait, the longer that you delay, it's going to hurt you. Okay, so start policies immediately. So second core metric that you need to track is annual premium. Okay, what is annual premium? Why is it so important? It's the average of the total annual premium that you sell. Okay, so let me explain that to you. If you sell a policy for $50 per month, the annual premium will be $600. Okay, you take the $50. Miss Betty's is paying $50 per month. You times that by 12. She's paying that every month for a year. You get a $600 annual premium. Okay, you might think that's great, but no, it is too low. You want to maintain an average annual premium of $900 to $1,000 or more. Okay, so to make sure that you are getting commission, making sure that you're setting yourself up for 6 figures, you want to make sure that you're in that range. The best monthly premium is $75 to $100 per month. If you are selling too low, you're going to go broke. Okay, this is the target, $75 to $100 per month. Okay. The third core metric to track is your mix of business. You might have never heard of this, but let me explain that to you. You need to track your simplified issue to graded rate. If you're selling only graded policies, the commission's lower. You don't want to do that. You want to make sure that you're maintaining healthy business and you're having your carrier structured to sell simplified issue policies over guaranteed or graded policies. There are 3 types of policies. If you don't know what they are, let me explain those to you. The first one is simplified issue, meaning the coverage starts day 1. There's no waiting period, okay? The best thing about simplified issues is that they get a higher commission rate. So you want to sell more policies that get you a higher commission, which allow for a higher front end cash collected so that you can make money, that you can reinvest in other resources, and you get the cash to go ahead and deploy to grow your business or just actually make money in your if you're inside of an organization. Second type of policy is guaranteed issue. These are 2-year waiting period policies. Think about it as like this. They accept all medical conditions. There's no medical questions. Think about like, hey, you are guaranteed to get a policy. AIG, everyone knows who American General is. They're a 2-year waiting period guaranteed issue policy. They are lower commission, so you want to make sure that you're not selling a ton of this. It's going to hurt your overall cash. And then they have graded policies. Graded policies have a tiered waiting period. Okay, think about it like stairs. The first year you get this percentage, and the second year you go up a level, you get more of a percentage. So it's important that you understand and track these numbers, because if you sell all guaranteed or graded policies, your cost of acquisition is high, but ultimately your front end cash collected will be low, meaning that you're going to have a problem with scaling. Okay, so example of a graded policy. In year 1, you might get return of premium plus 5%. But let's say Miss Betty lives to year 2 in her policy. She goes from 5%, now she gets 50% of her face value. So meaning that she will get, every year that you live in that graded policy, for the first 2 years, you're going to get more coverage. Okay, so GI and graded typically pay the same commissions, which are lower than simplified issue. So the rate or the metric that you want to shoot for is 80% simplified issue or more, and you want to keep that guaranteed issue or graded level, at 20% or lower. The lower the better on that bottom guaranteed or graded. Okay. Last one, most important, is your closing rate. You get paid to sell life insurance, so you better be able to close deals. If you don't close deals, you're going to see what it does to the bottom line. So you want to have a closing rate of 9% or higher. That's a good closing rate to maintain. If you're doing, if you get 100 leads and you sell 9 policies or more, always more the better, you're going to make money. Okay. If your closing rate is lower than that, your income will be reflected. People are like, I'm not making money as a life insurance agent. I'm like, how many policies did you sell? Oh, I sold 2 last month or 2 last week. Well, that's the problem. Your closing rate is too low. Okay. So if your closing rate is low, you're going to struggle to, make money. So in order to fix that, watch the YouTube channel, develop your skills, have a good leader, have a good mentor, have good scripts, have good products, and you'll make money. So let's recap for you. If you want to make money as a life insurance agent, 4 things that will determine how much money you actually make is: number 1, placement rate. Second is your average premium. You want it as high as possible. Third is mix of business. You want to have the highest simplified issue to guaranteed issue rate possible. And then fourth, you need to maintain a 9% or higher close ratio. If you do that, you will make money. They don't teach this, but ultimately, if you want to learn how to make money selling life insurance, this is the channel that teaches you. And ultimately, this is the real stuff. So this is going to help you grow your bank account as a life insurance agent. Hope you enjoyed.